Okay, Pankaj Pandey of ICICIdirect is now joining us here on ET now. Pankaj, should we begin with one of the stocks that we've got going to be getting the editor's take, and I've gotten one take already. Look at the buyback announcement that's come in 13th of December, when we'll have the board meet. Stock is down 76% from the issue price. What's the call?
Hi, good morning. Is the question for me?
Pankaj, that question was for you.
So Paytm is something which we don't track, so I'll not be able to sort of comment. Typically, all these new age companies we have been sort of shying away largely because one, we are still not sure on the path to profitability. The other thing, obviously, is that valuations are still sort of rich according to us. So this is one space which we have been sort of consciously avoiding for some time. We don't intend to sort of chase this space in near future as well.
Take off from what my colleague Anisha was flagging off with respect to HCL Technologies in their analyst day gave pretty weak commentary for the December quarter, talking about higher than expected furloughs for BFSI and high tech, as well as saying that they're not sure if IT spends are going to have visibility in the coming year. And they've indicated that growth is going to be at the lower end of the range, 13.5 to 14.5%. Does this come in as a disappointment?
Well, yes, some bit of a disappointment, definitely. But our sense is that a lot of or a lot of it is there in the prices, because our sense is the overall when you sort of look at the deal wins in the past 4 5 quarters has been in excess of $2 billion. We also see some of the factors which will sort of benefit in terms of margins. One is the higher contracting cost, which is 15% of the sale. I think would come down to about 12, 13 odd percent. Similarly, our sense is that attrition levels YY has been sort of quarter on quarter has been sort of flat. Our sense is that that will also sort of moderate. So we might see some bit of an improvement in the margin from current levels. And I think the stock is still quite cheap relative to tier one or other tier one peers like say NP and TCS. And which is why we still feel that at 18 times FY25, this is still a buy from an overall perspective.
Okay, I'm going to request you all to hang on, and we're going to do a chart check of KEC International as well. The top management, in fact, the MD and CEO, Vimal Kejriwal, now here with us. Good morning. A lot to talk to you about. Should we first begin with the plan of the center to launch and develop the power transmission system for integrating 500 gigawatts of green energy? What is this going to mean for KEC International and for the industry, of
Good,
course?
good morning. I think it's an announcement which was waiting to happen because with the plans of the government for renewable green hydrogen and net zero etc. We definitely need to set up at least 500 gigawatts of renewable by 2030. And if you look at the announcements, we're talking about 200 and 2,30,000 crores or so on the T&D part of it. Now, how much and how it gets translated into what numbers, we'll have to wait and watch how much of that market we can address. But except for the large equipment supply, most of it we can address. And apart from that, the fact that they are going to have a 500 gigawatt of solar, we are also in solar EPC. So I think it's a great announcement as far as we and other T&D companies are concerned.
All right. Mr. Kejriwal, hi there. Morning. So I just want to understand what the outlook is in terms of growing the overall T&D vertical further in order to really leverage on opportunities. The center has launched that plan to develop those power transmission systems. They're talking about integration of 500 gigawatts of green energy by 2030. So what does this mean for a company such as yours?
So if you look at our India business is roughly around, I'll say 3,000 crores and odd in terms of TNT. Last 2 years, it has not grown much. With COVID and other factors, the TNT business was slightly slow. This year, FY23, we had some notable project wins from Power Grid. And I think with these announcements, which to me are long overdue because the solar capacity is coming up in many areas of Rajasthan and Khavda in Gujarat, etc. The lines need to be set up quickly. So to me, I think this means maybe a 30-40% growth in the India business.
All right, a 30 to 40% growth in the overall India business. But let's also talk about the order book then in greater detail. In the previous quarter, you did see a 25% jump in your order book, close to 28,000 crore rupees. Inflows as well seem to be decent from what you're indicating in the first half. What is the target in terms of your order book, and what kind of order inflows have you seen?
So for the financial year, we have been looking at orders between 18 to 20,000 crores or so. So right now we are close to 12,000 crores, slightly below 12,000. We have L1s of more than 6,000 crore. So hopefully we should be achieving or be very near to our targeted order intake for the year. This also means that if you look at the current order book, we are at 28,000 and odd and 6,000 crores of L1. So we have an order book of roughly 34,000 crores to be executed over the next, roughly around 12 to 18 months.
Mr. Kejriwal, railways is where all the action seems to be. Tell us a little bit about, rail EPC tendering activity that you at KEC are witnessing.
So if you look at the railway business, we are generally around 4,000 crores of revenue this year also, and the order book is roughly around 7,000 crores. We have seen a flurry of tenders being announced in the railways, and as typical in the coming elections, so we have seen a lot of tenders for doubling and tripling of railway lines. Also, with the recent orders for locomotives, etc., all these locomotives would require very modernized infrastructure to be built. So clearly, there will be a great thrust of the government on upgrading the tracks, the signaling, everything else related to that, the electrification. The need for power would go up also. So we clearly see that a lot more tenders will come out in the railways in the next maybe 6 months or 9 months.
Mr. Kejriwal, if we can talk a little bit more about your order book. I know you've thrown color on it. I think it was about a little over a fortnight ago, the news came out that you bagged orders worth 1,200 crore rupees from some tower companies in America as well. What is it looking like? And given the exposure that you have, if you're going to be hearing about all these soft landing, hard landing of recession in Europe and US, what is all of this going to mean for your business?
So if you look at geographically, to me, India is doing very well. Some of the neighboring countries like Bangladesh and Nepal are doing well. Then the next area where you're seeing a lot of orders coming in is Middle East. Right now the oil prices are weakening a little bit, but I think they have made enough money. So Saudi, Abu Dhabi, Oman, we are seeing a huge flurry of tenders and orders coming out. I think our Saudi order book is more than 3,000 crores today. And the next one is Americas. In Americas, we are seeing a lot of orders coming out of the United States itself for power T&D equipment. I think on the back of the blackouts which they had and the water problems, etc., finally America has decided to, basically spend money on strengthening the infrastructure. Our Mexico factory, which had been operating at 50-60%, is now booked for at least a year. We got orders in India from that. So clearly, I can see three geographical regions: the Americas means United States, Middle East, and the South Asia part, where we are seeing a lot of capex happening.
Okay, appreciate your time. You're looking at a 30 to 40% growth in the domestic business, as well as more tenders coming in from the railway sector, and our L1 in 6,000 crore worth of orders. Mr. Kejriwal, appreciate your time. Thanks much for giving us those details. Well, let's move right on then and get in a quick view on some of the other buzzers in yesterday's trading session then, just taking a look at the list. And apart from KEC International, you had something like a Venky's India as well, which shot up about 12.5%. There was Godfrey Phillips, JK Lakshmi Cement, and this, of course, aside from the fact that PSU Banks really stole the show yesterday. Naresh, a quick call on Venky's India?
So, as of yesterday, it could be just a one-day move. The stock has been in a downtrend, peaked out around 3,800 plus levels back in June of last year, and has been in a lower top, lower bottom formation all through. It just bounced back from the same bottoms it made in June. So in June, it went down all the way to 1,800. In November, also it tested 1,800, and December also it tested 1,800, and suddenly a one-day spike. The fact is, the only reason it comes up on the radar is the fact that it has seen a huge volume bump up. It's almost a 20 or 50x volume bump up. That generally is an indication of a possible start going forward of a trend. So out here, it would be a little risky bet given that it has moved up quite sharply yesterday. But any fade off today towards the 1950 mark should be an entry point, would keep a stop loss at 1850. So it's a risk reward trade here. Possibly the stock can be making a short term bottom.
Right, okay. Let's just take a look at what else was actually moving yesterday. And really, it was all about PSU banks, wasn't it? Be it a BOB, be it a PNB, these have been seeing a fair amount of traction. To be fair, there were also some of the private banking names which participated in the recovery yesterday, leading the Nifty Bank to an all-time high. So Axis, SBI, IndusInd Bank, even ICICI Bank, they all held out anywhere between about almost 2.5% to 1% apiece. L&T, of course, has been the strong one within the lot. A solid 2% move, and Kunal, my sense is that this would have contributed a large degree, besides banks, of course, to yesterday's Nifty move, right?
Well, yes, in fact, L&T has a very high, not just the weightage on the index, but the effect on the Nifty, the correlation which we generally talk of, that's also very high for L&T. Historically, it's been around 74 to 75% for L&T. So the impact for when L&T performs, there is a much higher likelihood that the benchmark index also remains positive as well as buoyant. Now, yesterday and day before, the last 2 days, there has been a sea of change for the behavioral pattern for L&T. It's been typically a very low beta stock. To try and scale past about the 2000 mark, the stock took almost 2.5 to 3 months to try and scale past about the 2000 levels. And once that has happened, you've seen the stock scaling up another 125, 130 rupees in a very short span of time. So that's the change of behavior for L&T. The beta of the stock is increasing now, and possibly this 2000 mark, which was a major resistance earlier, that is now a major support for L&T. So I think dips closer to that 2000 levels should be taken as a good buying opportunity for L&T.
I have a very different view on L&T, and the price action aside, I think we must realize that L&T has a weak IT business. And considering that what we've got from HCL Tech today, where they've come out and slashed their guidance in the middle of the quarter. So they were the last one to come out with the numbers. They came out with the numbers in October and they increased their guidance. December is not even finished. That's like about 60 days. Not even 60 days that they've come out and slashed the guidance. The companies what L&T Limited has incubated, the IT businesses, Mindtree, LTIS, they are high PE stocks. If the growth contraction in the IT space happens, which it will happen, the sum of part for L&T will get challenged. It may be a pure capex play, but it has a very large embedded value of IT, which for 2023 could really peg the stock back. But what we want to discuss, well, AQR levels. Not in Delhi. No. We are not discussing Delhi. We're discussing Mumbai. Amchi Mumbai. The AQR levels in Mumbai in last 7-8 days have been dangerously high. There have been points where they have been even higher than the NCR. Now, having lived in Mumbai for almost 2 decades now, never seen such high AQR levels. Is this a seasonal disruption, or this is the unlocking impact of COVID, which has led to massive surge in construction, which is having impact in this AQR spike? And how long will this sustain? GB Sharma, President Skymet, joins us now. Mr. Sharma, first explain to our viewers why are AQR levels in Mumbai this year are dangerously high. I've never seen such high levels in Mumbai.
Yes, of course. For the last few days, we have been seeing Mumbai, the AQI's the levels rising beyond possibly even the national capital on few days. The other day itself, on Tuesday, it was about 350 in some places. Yeah, it is scaringly high. But there are multiple factors, I will say, which are contributing to these high levels. And as you brought out that yes, it has been one of the season where the worst level have been noticed and recorded. But then I still feel that it's going to be a little temporary phenomena, and then we should recover from this. At the moment, basically, what it matters is the wind conditions. You must have noticed in the early morning now, it's a nil wind conditions in Mumbai, which is related with the wind pattern which is up north. Everything trickles down from up north, from the plains of North India towards Mumbai. And at the moment, winds are like that, and persistently they are like that. There is no rain in the north for the last about 40 days. The wind pattern is persistently light and coming from down the slope from the mountains and cold. So temperatures and combination of the winds, they have given rise to these levels. Today also, I think a couple of stations I saw, even Kolaba and Bandra, they were over 250 or so, but some pockets like Mazagon Top, continuously they are having about 350. I hope those are the correct reading because they are dangerously high. But then in the coming days, I feel there is going to be a little respite because of the change in the weather conditions, and we'll see better conditions for the financial capital. Yes.
Good morning. This is Nantara joining in also. I'm from Delhi, and we have, of course, traded places now with Mumbai's air quality being worse than Delhi's. Now, so having said that, and building up from the point you were saying, there are some who believe there could be unexpected rainfall in Mumbai next week. Is that really when the respite is going to come? If those non-seasonal, unexpected showers take place next week?
Yes, you're right, Nayantara. There is a cyclone which is there in the on the other side of the coast, approaching Tamil Nadu, very close to Chennai at the moment. That obviously it will move across the southern parts of India, South Peninsula, and the outflow of that will reach even the west coast and affect the weather Konkan region, including the financial capital Mumbai. And rightly you brought out that we can expect some unseasonal rains for Mumbai. It should happen anything between 11, 12, 13, 14. So these are the 2, 3 days of rain and some showers. Not going to be very heavy, but surely at the same time going to be unseasonal and changing the weather conditions over the financial capital and suburbs. I will say entire Konkan region will feel the change in the weather conditions, and winds also will change accordingly. So this is what will bring the change and bring respite also, I will say, on the high AQI levels which are persisting there. It should happen. It should start improving. I think even tomorrow also we should feel the change in the wind pattern as such. The financial capital Mumbai is typical to the wind pattern. In the morning, you must be realizing that the winds are cold coming from the land. As soon as we reach the noon hours, around 12 o'clock, 1 o'clock, you start having the sea breeze. That is, the winds become southwesterly. Every day, this pattern is there. It's a reversal of the pattern which takes place. It makes a loops of, we can say, the loop of air which extends to about 3,000 feet high. And so that means the pool of air is going round and round around the same place and is not allowing it to break that barrier. And that's how we are having persistently high AQI levels, which I feel should happen very soon, respite because of the cyclone approaching here. Yeah.
Mr. Sharma, but just to understand it a little bit further, because a lot of experts as well were attributing it to the infrastructure projects in the city, but the BMC has categorically said that that cannot be the reason, because they said that it's not like construction activity has picked up this month only. It's been going on for the past many months. So can that in any way be attributing to the high air quality, poor air quality?
Nainta, I will attribute the vehicular pollution more towards that rather than the construction contribution. Mumbai enjoys the best of the AQI during the monsoon because of the rains. And as soon as the monsoon withdraws, we start seeing a little rise in these levels. Okay, that is mid-October or end-October, and they are worst in the month of December and January. It happens every year. The only thing is this time we are noticing some outliers, and then the spike in these AQI conditions reaching 350 and beyond, almost competing with the national capital. But then construction activities, I'm afraid I'm not for it. That it may not be contributing to that extent. Basically, the climatic conditions they attribute and contribute more towards these higher levels of the AQI, which has been noticed. Okay, there are reasons visibly. We see those conditions happening this time: absence of rains, a lack of little moisture, a drop in the temperatures. All these things are happening and then contributing to these higher levels of AQI.
Yes.
Yeah.
Mr. Sharma, great to have you on the show. And, it's respite enough that you tell us that this AQI is not going to remain poor for a very long time.
Yeah.
Even if we have to deal with December rains, so be it. But good speaking with you on the show. Let's just take stock of what the SGX Nifty is settling in at, about 0.5% higher. That's how it kickstarted the trade today. And let's see where it's currently at. So it seems like there is going to be some continuation of the move. Eased off a little bit from that 0.5% uptick, but still going good by about 59 odd points, 18,787. Kunal, beyond banks and beyond L&T, what's looking like a strong potential trade? It may not be holding up right now, but it has the potential.
So cement is the other sector which looks attractive. In fact, all of the cement stocks, and it's, earlier it was restricted towards ACC and Ambuja, but this time around you have full, I would say, full participation from the sector, where you have Ultratech Cement, Shree Cement, the dominant ones on the large cap names, even the mid cap ones like India Cement, Ramco Cement. These stocks have started to show a lot of strength. In fact, many of these stocks have broken out of their multi-month, multi-week correction for themselves, and are now coming back about their 200 DMAs respectively. So that's a good sign which is emerging from the sector. But I think other than banking, other than cement, and probably maybe one or two the smaller sectors, it's very difficult to pinpoint certain set of sectors as well as the group of stocks. Like for example, auto stocks, the rally somehow has just gone into a bit of a shallow range for these stocks. You don't see any momentum coming by into these auto names. Even the private sector banks, the rally is a bit more staggered. I would believe even just the likes of Axis and Innocent are the ones which are looking strong, but the other names are just about lying low for themselves.
Pankaj Pandey, good morning. When you first read the news of Paytm considering a buyback, how did you react?
So I didn't react because we don't track the stock. And generally, I mean, all these new age companies we have been sort of consciously avoiding for some period of time. So that still sort of stands.
Mathematically, if you have to look at the messaging, and optically we have to understand, here's a company which is burning a lot of cash. Now they're saying we have a path to profitability, but we would conserve our cash. And now they're doing a buyback. So can I say that Paytm, along with this buyback, not only is trying to ensure that the stock price gets a back support, they in a sense are explicitly now telling the markets that, look guys, we are not going to be burning a lot of cash, and the cash requirement is going to go down. So we are not a typical startup company which only survives on equity capital raised to burn. Pankaj?
So question is,
That's
yeah.
right.
So so I think in new age companies, probably if you have to sort of look at, we might look at something like Zomato, because our sense is that is only one company where it's a sort of a habit forming. We've seen in our own experiences, and they have the propensity to sort of charge, whereas I think a lot of other businesses are really not sort of white spaces which we would want to sort of chase. So and it's sort of still evolving. We still don't know how much of a damage or disruption they can cause to a traditional bank. So from that perspective, I think that is still a space we would not really sort of chase. I think Zomato is something where we are sort of looking from the perspective that this is one company which is sort of tapping a white space and has got some bit of a pricing power. Otherwise, I think a lot of businesses are already there. It's just that you're sort of discounting more, be it in logistics space, to sort of survive. And really not having pricing power until the time they don't become profitable and on a sort of a sustainable basis. I think we are still sort of skeptical in a lot of names.
Pankaj Pandey, we've been talking about this one. We've got the editor's take earlier in the day too. We talked about it as the rising tide phenomenon, but one just keeps looking at the new highs that are being made. Look at a central bank. I'm talking about the smaller banks. Central bank, new 52-week high, yesterday higher by 12%. A Bank of India has now reached 100 rupees. Yesterday, up move of 8%. Bank of Baroda, yesterday 7%. A Karur Vyasa Bank also, yesterday nearly 10%. What? These are not going to stop anytime soon? Are they getting more expensive? What's your call?
So, question is for me.
Pankaj Pandey, that was for you.
Yeah. So I think when you sort of look at the entire PSU as a space, I think what one also needs to sort of factor in also is that the kind of damage happens in a sort of a down cycle. And I think right now we are in an up cycle. We know that next 2 years, none of the major banks, including PSU banks, are going to sort of hit any major NPA sort of concerns. But having said that, I think one needs to be selective in PSU banks, which is why we would prefer something like, say, State Bank of India, Bank of Baroda, or something like Indian Bank. Beyond that, I think most of your PSU banks are offering a similar quantum of or similar business opportunities, simpler or similar template of opportunity, and with a lesser valuation. But our sense is that these are trades which one can sort of play technically. Uh, don't think that one should be sort of marrying a lot of these names to the portfolio as of now, because I think historically we have seen quite a decent amount of volatility in these. And even when you sort of look at from their top, a lot of these names have eroded or have seen a good amount of erosion. So I think one needs to be selective in PSU banks. I think good part of the rally probably is already there in terms of prices. So I would not really recommend fresh entry in some of these names or the bottom down or the lower end of PSU bank.
But Pankaj Pandey, why are you so confused today? There's only one Pankaj on the show. So all the questions are directed towards you.
So I got sort of confused whether you're asking technically or fundamentally.
Okay. So my next fundamental question is, L&T is always perceived to be a company which is a play on capex. The stock has hit an all-time high. But I want to give another dimension to this argument that they also have a large IT business which is going through a process of derating. So will L&T get derated when the IT business is getting re-rated when the IT business is getting derated?
So I think IT as a overall business has already been soft. We haven't seen much of a price performance, and which is why we would not really sort of attribute the overall sideways movement in L&T largely because of IT. I think the bigger or the brighter spot in L&T or in the market as of now is the entire infrastructure space. I think what is largely clear post Gujarat election is that you will continue to see government adopting a capex-led growth template, and which is why we like the entire space. I think this is one space which can sort of do very well over the next few months. So obviously L&T is at the top. We like the entire road set of players. I think H1 has been pretty soft for them. We would expect H2 execution plus ordering plus tendering, everything picking up. We like the even power T&D as a space also, which is why we like KEC International or Techno Electric. So I think this is one space where we haven't seen that kind of a move when you see a lot of other sectors, be it auto or be it banks, which are sort of doing well. So we would want to believe that this is one space where you could continue to see a good run up, at least till budget and even post budget, if there is a confirmation that you will see 15 to 20% higher allocation from 7.5 lakh crore to say 9 lakh crores or even excess of that. So that way, I think this one space is looking quite attractive to us. And I think a lot of companies have been beaten down in terms of margins. So KEC International, for example, the margins had come down to mid single digits. Our sense is that all of these or a lot of companies will recoup or will post better set of margins. So I think a lot of triggers are in place for all this entire infrared sectors to sort of do well, including cement.
Right. Okay, the one stock which is going to be in focus and perhaps have a rub off on the whole sector is HCL Technologies. They're expecting their FY23 constant currency revenue growth at the lower end of 13.5 to 14.5% guided range. Kunal, IT has been bleak barring a few odd sporadic days when you see a overnight big jump up on NASDAQ. But do you foresee more pressure for IT names? Because now the news flow is turning.
So it's not a free-flowing index like what we saw in maybe 2020 second half or 2021 the entire year, where most of the IT stocks, be it large caps, be it mid caps, all of them they were performing in a different zone altogether. Right now the move is very very staggered. For example, the likes of HCL Tech and Infosys till last 2 3 months so far, these stocks were doing exceptionally well for themselves, rising up more than I think 25% approximately from their previous swing lows. HCL Tech below 900 to now almost 1150, 1180 plus mark. And Infosys also, I think, from 1400 levels towards 1700 odd mark for itself. So the kind of rise these stocks have, shown, clearly demarcates themselves with the other stocks from the sector. Now, when you look at the mid cap IT names, the likes of Coforge, for example, that's underperforming. You've seen the likes of Mindtree, even Birla Soft, etc. These stocks have seen very slow, steady recovery for themselves, not being extremely strong. So I think that's one of the reasons why I would believe you have to be very selective on the IT stocks and IT sector. You can't be betting on the entire pack and expect that the underperformers will also play a catch up. It's always better to go with the large caps and the performing names, and I would still go with Infosys and possibly even HCL Tech.
Yeah, speaking of HCL Tech, they held their investor day in the US, and the management said that they are confident of achieving a lower range of the margin that they had guided in October. Just listen in to some of the key highlights.
In October, when we announced our quarterly results, we had guided whatever 12 to 14. We increased our guidance from 13.5 to 14.5. So we had certain assumptions which helped us to derive 16 to 17% services growth. We had assumed some furloughs, but we had a range. But what we are seeing is a little higher, and the industries, of course, mostly BFSI is a segment which is a little more impacted by furloughs, followed by the tech companies. So I think that's where we see a little bit more. But we feel pretty confident about hitting the range. It's a narrow range, right? So we will hit the lower end of the range. We feel comfortable. Does it change anything on the realization increase? Yes. The bill rate enhancement was a very successful strategy 6 months, 9 months ago. And we were fortunate that we got the best out of it. And in fact, Pratik had announced that 1 percentage point we increased our profitability due to billing rate enhancement. So we got out of the door a little early. We got whatever we can get done. I think in this environment, it's going to be tough, except for some niche skills.
Okay, that's HCL Technologies management at on the sidelines of the US Investor Day. The one other space which is going to be in focus is going to be some of the steel players. So look out for what SAIL and JSPL do in trade today. You know, news reports are indicating that the railway budget may actually propose 1 lakh kilometers of new train tracks over the next 25 years. Although, of course, it's a very long-term target, but sentimentally, you may see SAIL and JSPL actually hold out. Railways, in any case, is one segment which has done extremely well. These stocks are sitting at massive year-to-date gains, and even on a month-to-date basis, about 30 to 40% is the kind of gain that you're seeing on each and every counter, which is within the railways sector. The pre-open rates then, let's just revisit what they're up to. It's indicating a bit of a quiet start, although the handover from the globe is quite okay. Asia, as I see on my screens right now, is holding well in the green, barring Shanghai, which is flat. 1% move Hong Kong, Kospi up 0.6%, and Japan as well, which is holding up about 1.5%. And so is the SGX Nifty, although it's eased off from where it started off, but it is indicating a positive start. The SGX Nifty cooled off actually quite significantly. I stand corrected here after that 0.5% move that it made on open. From there, it's now barely holding on to the green. So that's that in the SGX Nifty right now. But Naresh, just wanted your sense on, while there's no denying that we're clearly decoupled and disconnected, even on days we've had strong handovers from the global markets or weak ones, we've managed to or chosen to follow our own path. And today it seems like, going by the pre-open rates, that it could be very much that kind of a day. While Asia is holding up, so was the SGX Nifty. Even the SGX Nifty is cooling off, and the pre-open rates are indicating a flat start for us. You think flat is going to be the move, or weak is going to be the trend for even the broader markets, the mid and the small cap index, that is?
So I would be more positive. We could be looking at a 100-pointer upside also possible on the Nifty, and a 300-pointer on the Bank Nifty by end of the day. So positive on the Nifty, the Bank Nifty, as well as the small cap. So overall, what we are seeing is the structure is very clear across the world. Some of the parameters which we look out for risk, which is basically the US dollar index, we are below 105. For the first time, we are below the 200-day moving average. The global indices like Dow Jones and S&P 500 made their attempt at the 200-day moving average. And going forward, if they break out above that, that would be a big change. But overall, what we are clearly seeing is there is momentum in the leading space. So Bank Nifty has hit a new all-time high. So overall, extremely positive for the day as well as for the short term. Until the time we hold above 18,440, the bias has to be positive. And say if we go above 18,850, it becomes momentum in a big way. But overall, bullish on the Bank Nifty more compared to the Nifty, and small caps continue to be very, very interesting.
As well and find out what it is that our chartists are picking out for the day within the broader universe. Kunal, as Nikunj was saying earlier this morning, you really have to hunt for some quality mid-cap names. So what is it that you've cherry-picked?
So not exactly a mid-cap, but then a stock which I think has sprung up on the charts and is on the verge of a bigger dimension breakout on the monthly as well as on the weekly charts, and that's Bosch Limited. The stock is completing a swing pattern breakout comfortably above the 200 DMAs and the 50 DMAs. And I think post the swing breakout, if it happens for the stock, I'm expecting at least a 1,000-pointer up move over the very near term. So buy with a target of 18,200, stop loss at 16,950.
Okay, those are Kunal's cracker stock ideas. Naresh, what have you selected from the broader universe today?
So continuing with the bullish stance on United Spirits, the stock is on verge of a flag breakout, came very close to it, closed well above the 940 mark. The trend is extremely positive here. We are seeing a good trend across this FMCG and related space. So out here, looking at a fresh move towards an all-time high. So a buy at current levels as well as on dips. A stop loss at 910 and a target price of 1,050.
Okay, so those are cracker stock ideas coming in from both Kunal and Naresh from the broader universe. Now, much of this year, we've talked a lot about ITC and its phenomenal up move. In fact, it was Nikunj who had said the markets were giving it a stepmotherly treatment. That was last year. Pankaj, there's another stock, large tobacco exposure, which has had a great year. I'm talking about Godrej Philip, which is now trying to take out 2,000 rupees. It was higher by 7% yesterday, a new 52-week high. Do you track this stock? What's the outlook?
So on cigarette space, we track two stocks. One is VST Industries. Obviously, the other one is ITC. We don't have a coverage on Godfrey. Typically, we don't know whether the land monetization is sort of panning out. But typically, what we have seen in the cigarette as the overall space is that from pre-COVID, the recovery has been pretty good. I think ITC has been sort of doing a lot more better given the fact that they've been gaining market share. They've introduced 10 rupee cigarette, which is sort of gaining traction. Compared to that, VST is still sort of struggling to sort of recoup some of the market share what they have lost. Although they have also launched a rupee 10 kind of a cigarette stick. But I think ITC clearly is looking a lot more better within the entire cigarette as a space. And I think if the government plans to sort of curb gutka or tobacco consumption, I think it is structurally even more positive for ITC because I think that's a sort of a healthier way of consuming tobacco rather than sort of consuming orally. So I think if there are measures taken in that direction, I think it is going to be even more better or bigger positive for ITC.
All right, Pankaj, we'll let you go on that note. Appreciate you taking the time out and joining in with your fundamental take on the markets. Let's run you through then some of the other top headlines.